welcome back to the RationalInvestor.com's Daily Brief Recap. Dun, dun, dun. Is YouTube going to kick in? Hello, everyone. And it kicked in, too. All right, quick video for you guys here today. Not a heck of a lot new going on. It's basically same old, same old. So, long and short of it here, and the breadth information, we just manually updated it. It will update automatically. It's just a question of when do we get to it, but it's interesting. Our CTO had his presentation on the site on Monday, and he updated the data for us, and you can see, wow, can we please get this data updated in real time? Because, wow, what an incredible sell signal there in the stock market a week or two ago from our breadth data. But anyway, that's not really relevant for today's conversation, but can't wait till we get our dashboard up and running. And as I've said repeatedly, as soon as you see this up and running and updating on a daily basis, then TRI is ready to kick ass for this next cycle. For you guys, I just like to generally keep the conversation relatively limited. In fact, actually, I haven't even updated this. It's the same thing from yesterday. In the stock market, I'm not really too excited about the stock market until I sort of see things settle down here a little bit. I have been posting, and you can see through today's daily brief video, I was talking about this at length. I put sort of tweets out to this effect. I mean, first and foremost, we knew that the market was going to force the Fed's hand, so it really shouldn't have surprised anybody that the Fed came out and slashed interest rates by 50 points. But the point here is, what's that actually going to do? Keep in mind, the U.S. economy was still fairly strong. I mean, the jobs numbers were pretty good. GDP numbers were pretty good. Inflation was fairly muted. Now the Fed has gone and just absolutely juiced the system. I've made the argument repeatedly that I expect the stock market to go to new highs and suck all the public into the long side of the market here. And this now is just, remember, Fed rate cuts take 6 months for them to actually be felt by the economy. So here we are in February, March. What's 6 months from now? Can you see how the stock market is going to be absolutely insanely bullish heading into this U.S. election? I mean, it's quite shocking. So, COVID, all that. In a weird sort of way, I actually like the idea that I don't really want to be a commodities bull anymore. 17.5-year fear cycle. This is perfect. What do you think the international demand for crude oil is going to be if everybody's crapping their pants around the world? Do the Americans care about crude oil prices? No, they actually are net exporters of crude oil now. If anything, and I've said this repeatedly, I think Canada has basically, I would be shocked if the country of Canada was even in existence 20 years from now. That's how bad the situation here in Canada is, in my opinion. This is disaster written all over it for Canada. But anyway, that's here nor there. I think I've told you recently, I'm a U.S. dollar bull, and I want to stay U.S. dollar bull. But over the next year, this is going to be absolute insanity. And I think I've even said in public videos, I think it's actually best for the public to stay out of this market for the next year or two. Wait for the recession to hit. Wait for all hell to break loose. And then, when they're crying, that's when you want to be buying. For those people that are trading the market, obviously, hey, Brian, I can't just sit there and do nothing. Ironically enough, actually, the one part of the market that I absolutely love right now is crypto. I might make the argument that the correction following this auction of government seized bitcoins that was supposed to happen on the 18th of February, and the subsequent reaction is very healthy. And what do we say about reload zones? That's a place to reload. We might have to work our way right back down to the bottom end of the range here, but on balance, I would actually prefer to be a net buyer of crypto all through this. And as the broader market and stock markets are going absolutely insane, ironically enough, thinking growth next cycle, try and if you want to buy stocks, I think concentrate on things like crypto related stocks. I think that's a fantastic part of the economy to be invested in. We do have our TRI SOF meeting tonight. Every Tuesday we do that. And actually, we put out on the site, because this is the real value of TRI, is this sort of 1 + 1 = 3. So we have a sort of communal site project right now where we want to really explore what are the growth sectors of our economy for the next 10, 15 years. Obviously, crypto, blockchain is going to be a huge, huge growth engine for the next 10, 15 years. So that's sort of, I would rather move away from investing in gold and oil and soybeans and potash and stuff like that. And really, I want to focus my attention on the growth stories for the next cycle. So really what I'm saying here is this should be absolute music to crypto enthusiasts' ears. All right, let's get back. I'm not even quite sure why I went on that crazy rant, but nonetheless, let's get back to our basic message of the day. With the Fed taking rates down, obviously that has lessened the propensity to want to own U.S. dollars. U.S. dollar is coming off appreciably. I hate to say it, and I don't want to sound like a broken record, but higher highs and higher lows defines a bull market. As long as we don't take out these key lows and start emming out, I think the general trend in the U.S. dollar is higher. I don't know whether I really want to buy into the idea that I want to buy euros. If anything, I would almost prefer that if we have a precipitous rally in the euro, I want to be hunting short setups there, but we'll see how that goes. I think the Fed right now, like we said, sort of, reacting to stock market and international sort of, if anything, it almost feels like it's just sort of there's a vacuum of leadership around this issue around the world. I think the Fed wanted to try and come in and sort of stabilize things, but the irony of it all is that, as we sort of said a moment ago, the market had already told them what they were going to have to do. And now when they actually did it, you notice that actually on the event, well, that was the end of the dead cat bounce. So, kind of like what you see here. And my message to site people right now is this stock market is very Donald Trumpy. Donald Trumpy is not the type of guy to politely tell you, look, it's time to get out of stocks and maybe hop off on the sidelines. Think of his Secretary of Treasury. Think of what firm he came from. Understand these people are not your, what's the best word to use? They're not really thinking in your best interests. They just simply want to keep the system going and, of course, line their pockets as much as possible. So, what I found interesting was, the top from back last summer and the precipitous drop. Notice they just brought the market back against previous lows, went ahead, consolidated, and then broke the market back out. Then, rallied up against the old highs, broke it back down, consolidated, broke out. My hunch is this is exactly what we're going to see again. So, you can see the 50% level off of this meltdown here. And what was really interesting is even the duration of the meltdown was almost exactly the same. There's really no difference here. It's almost like these guys are actually like a little bit cliche in the way that they are operating. Now, of course, remember, $7.5 billion on the SPY options. As soon as they got that deal done, let the market drift a bit, and then just pull the floor out from underneath the market. What a surprise. And the worst part about this is they got away with this blaming some typical flu bug that I have a funny feeling has been maybe helped along a little bit here. Yes, I know it's nasty. Yes, I know people die from the flu all the time. This isn't something that's new. It just feels to me like this has been helped along quite a bit, which I really don't like. Are these politicians and stuff, are they actually working for us, we the people, all that kind of stuff? Or are they actually working against us? And I think the environment right now is a lot of these people are actually working against us. Find it fascinating. In our daily brief today, we took a long look at Miss Lagarde and her cryptic numerology messages, which I found fascinating because I think actually she's being used as sort of the mouthpiece of what this sort of Illuminati 1% would like the world to look like. So I actually put a challenge out to site members. Let's really keep a close eye on dates that this lady mentions, and obviously we have to take her very seriously, but also too, um, we don't want to get wrapped up, kind of like what we just saw with COVID there. I put out a tweet over the weekend saying, does anybody else think maybe stuff just went on sale? And, you can see the violent rally yesterday and the follow-through rally this morning. Clearly, other people thought that as well. But let's see if we can use the information of these people. Let's see if we can use it against them. Because I found it fascinating. And what I mean by against them is, and wow, am I ever going off on a weird tangent here today? You know, she clearly made reference to a specific date in this speech. And I'm not saying you like her or hate her, but what I'm saying is this is the date that she made reference to. You tell me, as traders and speculators in the market, is that kind of an important event? Did something happen there? Ay caramba. So that's part of our conversation today. And, same sort of thing. Let's work collectively so we don't get sucked into this emotional response. And let's try and figure out as a team, TRI as a community, let's work together to try and sort of understand what the hell these people's plans are. Anyway, kind of a funny rant there for you today. Risk on, risk off. Like I said, there's not a heck of a lot new going on here. I think now it's the reaction. The market was clearly spooked. Dead cat bounce. Dead cat bounces love to bounce into 50% rules, and basically that's exactly what just happened there. I do believe that this is going to take some time. Interesting, according to Mr. Gann, we shouldn't have hit this 50% level for quite some time. So that in itself is an interesting sort of tell. But the point of the matter here is you can see how long it took the market to consolidate and find a footing and then start moving higher in earnest. It's probably going to take that long. And I've sort of suggested all along here that I was looking for some sort of market pivot through the Ides of March. And I still think that that's the same case. I haven't really, in fact, actually I didn't buy anything today. In Stockland, actually what I was buying, and we'll get to this in a bit, was actually some more crypto. Because I like me my crypto in here. All right, so let's try and get a little bit of straight message here for you here, guys, here today. As I said, I'm losing my interest in the oil business. I only have one more oil stock still left on the books. It does have quite a bit of natural gas exposure. If anything, I do like the idea of concentrating on natural gas. I don't like the idea of buying straight oil plays. I've lost sort of my enthusiasm for the long trade on oil when we started breaking all of these lows. And really, frankly speaking, I don't really want to be an oil bull anymore. You see these AB equals CDs. I wouldn't be surprised by time, maybe the summer rolls around, we actually see oil down $30, $40 a barrel. Which, again, like I said, Canada is really screwed because we as a country decided under a gentleman by the name of Harper's leadership to literally mortgage our future on this thing called the tar sands. Invested like billions and billions and billions of dollars on the idea that crude oil prices would be above $40 indefinitely. And I can literally see it happening. The market is going to put all of this investment that Canada made in the tar sands is going to make it worthless. Really sad for our country's future, to be honest with you. Risk off. Was so pleased to see, of course, Julian, our resident gold trader. I think he's operating off of like 4-hour charts. having a wonderful time. Over the weekend, he was like, I got to be up first thing as soon as this damn market's open, any kind of buy signal, and I'm totally going long. And of course, you can imagine how Julian's feeling today. Way to go, Julian. You might argue, and Everett, I'd be curious. Let's see if we can get some feedback from the audience. I know there's a few people that watch this. What do we call this kind of candle? Actually, what do we call this 2-bar candle? This big red bar and then this funny little candle inside the big red bar. I actually just gave you the answer. So this has a very specific name in Japanese candlestick lore. I don't even know what do you call it? Like namology? This has a very specific pattern. And oh, by the way, a break of this high is a buy signal. I got the impression that they dumped the gold because they just ran out of shit to sell and they had margin calls. So it's kind of artificially down. Kind of the same conversation that I had about Bitcoin recently. And in essence, gold just issued a buy signal here even this morning. And they love the fact that the Fed's now lowering interest rates, basically saying, inflation, come on back, come on down. So interestingly enough, and you want to really get freaked out, we start doing our chaos theories. If we start taking these eyes out, you ready for some insane numbers? I mean, you might even argue that the chaos theory has already actually told us where this market wants to go based off this consolidation. And if we go boobity boo, boobity shmoo, 1772 off of that little consolidation. You could make an argument that this consolidation paints 1887, and of course this is where the gold bugs all go crazy. That consolidation paints $2,000. Woohoo! And this one here, if we break out to new highs, that's a violent reversal. That's going to paint up to 2159. So, welcome to 2020. Welcome to probably getting back into like helicopter kind of money talk. Fed's basically balked to the politicians. And, the irony of it all is that 50 basis point rate cut, we won't actually see that in the system for a good 6 months. Get ready, everyone. This stock market's going to go absolutely nuts. And the irony of it all is, how do you put a top in the market? All you crypto enthusiasts, you know exactly how they put the top in crypto in 2017, 2018. Everybody's got to be long. And it's got to get to the point where you actually say, you're not long the stocks? What are you, crazy? And then once we get to that point, then we know the top is in. So get ready. It's going to be crazy. The one thing that just totally confounds me about all of this is the crazy bond market. Technically, interest rates on the long end are going just absolutely parabolic to the downside now. I suppose this is a function of, the ends of cycles and absolute chaos in the market. The chart I wanted to show you was this one. So, we've gone blasting even beyond all of my reasonable downside targets here. I suppose we can start, we have this huge one here that's painting 0.75% on the long bond. Wow. So, long and short of it here, interest rates are falling. The irony of all of this, of course, is as interest rates fall, the Fed's trying desperately to keep up with the yield curve. Yield curve is threatening to go inverted again. We're getting really close to back to that kind of environment again. So more anecdote of sort of the end of the big bull cycle. But I tell you, I think there's more juice in the tank to go. Suppose you might argue that once this thing actually does sort of stall out and actually start to show that that interest rates might actually start heading back up, then that's maybe where the stock market top is painted. But I don't see any signs of that anytime soon. Wow, what a crazy market we're in. Again, I got to say, 30 years in the business, I've never seen a market like this. This is just nuts. But it is what it is, and it is the end of the cycle, and, Jupiter-Saturn crosses. Last time we saw a fear cycle Jupiter-Saturn cross was 1980. when you all go look at your gold charts, what happened to gold price in 1980. So go figure. Um, as I said, I haven't even had time this morning to even go and look at any new stock ideas or anything, and didn't even update this because we spent all our time in the daily brief actually talking about shitcoins, believe it or not. But if we look at the corn, it's not a hell of a lot of difference here. Remember we talked on the weekend about maybe potential head and shoulders is, which would suggest maybe we get some sort of spike up into these highs. There's 38.2 off of the range. I could see a bit higher here. What I found fascinating about this rally peak, we talked about this in the video yesterday. If we look at all three, we talked about these wicks. So I don't know whether you remember this or not. Maybe it was a broiler chicken show, but we talked about this wick. Price wanted to explore up into there. 13 EMA is still a little bit higher, but you can see how it's racing down here, just like a Dickens trying to catch up to price here. We talked about this wick on Ethereum. Remember we had said that the short trade actually was still working as long as that wick didn't get taken out. Notice wick did not get taken out. So technically this short trade actually is still working away. And good old Litecoin. Litecoin actually didn't even get up into those wicks, showing a little bit of signs of failure. If anything, of the three, Litecoin's actually acting the best here this morning. You could make the argument, 1, 2, 3, we get a move back above those highs from yesterday on Ethereum. That's a fractal bottom. Probably a good case that we rally up top. And as we said, if you're short this range, well, you want to get out of there on a break of that high anyway. I don't really have a setup on Bitcoin. We just hit that short objective. But you can see 1, 2, 3. If we do get a move back up through those highs, that'll take out that high there. That will probably, on that event, would probably mean the market is accepting above 13 EMA. And we're back on the bull side. But you can see, bang, bang, bang. The bull just sort of got kicked in the shins here this morning. And really on balance, guys, I've told you this before. This is way too early for me to think top or bottom. Look how long, I showed you this on Ethereum. Look how long this bottom took. Look how long this top took. If we have to take this long to actually find a bottom, that would be par for the course. And really, I like reload zones, Brian. Now I've got AB equals CD bots taking us down into reload zones. If I wanted to be a buyer, I really want to concentrate on sort of this 170 area. So nothing really new to do on the big boys. Where's my attention right now? My attention, actually, believe it or not, is on all these wonderfulnesses. Over the past year or two, you can see I've just been slowly accumulating some of the names. You're like, Brian, why the fuck are you buying that piece of shit? I don't know. Maybe the symbol appeals to me. But I've taken the opportunity over the past couple of years. I just keep sort of nibbling away here and there. I'm not betting the farm. These are like 0.01, 0.02 BTC, those kind of things. And I do like a lot of the bottoming action that I'm seeing. Here's a good one, this VTC. I picked a little bit up off of it. Off of a test of this original bottom down in these lows down in here, thinking maybe there's a bottom that's coming in, through these lows. We tested the lows. We tried to turn up, but turns out it wasn't. This is why I like doing the nanny nibbles, because I don't have to worry about getting stopped out. I'm just nibbling against assets that are down at the bottom end of the range. Am I in a big hurry here? Everybody should know exactly the duration little old ladies get told the day that their investment advisor says they're going to invest in this idea for them. Right off the bat, every single brokerage firm says exactly the same investment horizon. So it'd be interesting also, too, to see whether any of you watching the YouTube video know that number. So ironically enough, going and buying a little bit of this 1 year ago, not really that big of a deal. And I really like this W that's trying to come in here. So I actually went and picked up a little bit more. So first purchase was here. Second purchase, as you can see off of this W. So now my average is here. And interestingly enough, you can see this is just going back to last spring. Rally peak, 50% rule, sitting up top here. I can technically get off a double now on my trade and it not even get back to the 50% rule. Give myself a free position, free coins, rest of your life, la la la. So I am nibbling. Well, there are some names that look attractive to me. Now remember, people, I'm not here saying, yeah, I want you to buy this. I couldn't care whether you buy any of my ideas or not. No, I won't be insulted one way or the other. There's another idea, and I guess we'll finish off the video with this idea. Mr. Kavarkinator brought this to our attention today. Oh, was I supposed to say your name? I can't remember. Anyway, I did, so too late. Sorry. I love giving shout-outs. Remember, TRI is all about 1 + 1 = 3. Ideally, and you've heard me say this repeatedly, I'm not that smart of a guy. I'm just another guy in the market. I've been working on this this business, trying to learn and understand money management for a very long time. But I can't find all the ideas. And even if you have the best screeners in the world, it's fascinating when when I pop into the site and I just chat with people and they're like, hey, have you seen this? Hey, did you see that? And I was like, no, I didn't even. Oh, son of a bitch. So, I mean, like I pulled up this, right? It's a syndicator. I don't even really know the story, but if Kavarkinator likes it, I'm down. I'm just kidding. But this is on Binance. It's also on Trex. Trex is really thin, so just be aware of that. But I really do like, reload zones. I like the fact that they brought this thing right back down to the bottom, rallied it back up, V bottom, V top, and then right back down to the bottom, which paints yet another reload zone. So I'm getting one of these kind of situations where I've got pretty sexy trade location. And then you drill down here and you go, hey, what's going on here? That looks like a W. And if I change that to a line chart, hello, W. So, yeah, you guys have been watching these videos long enough. What do you think? Old man Beamish going to take a shot off of something like that? You should probably know the answer. So, this is a kind of market, and I mean, you tell me, has this thing got any room at all to run up? How did I take $500 and turn it into $100,000 in 2 years, and no one position in my portfolio ever represented more than 5% of that $100? That means I was buying shitcoins for $25, and I was able to ramp that up into the hundreds of thousands of dollars. How did I do it? Well, it's by forcing myself to come in and buy off the bottom of the range, and when this thing starts going absolutely nutso, which these things invariably do, I'm selling halves on doubles and just spoon feeding the market as the market pays me. So, you might look at this as opportunity is nowhere. I look at an idea like this and I go, opportunity is now here. So take it for whatever it's worth, but really good analogy of the kind of trader I am and what I do in the market. So, all right, everybody, I hope that helps. As I said, broader market, probably, slow down. This is crazy. Get him on TRI side if you want to trade gold and ride Julian's coattails because he's just killing the market right now. And, of course, that makes me happy because he's making me money. He's trading TRI's money. I can't complain there. Slow and steady guy, probably this message, keep it simple, stupid. Don't overthink this stuff. This is my kind of trading, and I'm not even in this market right now. You know that I got stopped out at scratch a few days ago, and I'm not even participating in this nonsense. If anything, if I'm even the slightest bit interested in investing in this thing, I'm going to have to see a period that sort of looks like this. So this kind of action right now, I'm just on the sidelines as a spectator. So. All right, guys, go slow. This is a dangerous market. Have some fun. Play from a position of strength. If there are opportunities out there, I would highly encourage you to try and be a buyer against lows. And, of course, a seller against highs. So, have yourselves a great day. All the best, and bye for now.